Hey everybody, it's me, the Onside of Wall Street, from the balcony at the New York Stock Exchange. We are sporting, even though he is, as per the New York Post, the best dressed man on Wall Street, we are sporting the same kind of duds. We got cool sneaks, he's got some cool colors, I got my Lacoste thing going on, we got a very cool hoodie. You know why we do this? We want to be accessible to the general public so that we can share with you everything we know about tech, the volatility, earnings, the stock market, and the New York Stock Exchange. Thank you for joining me today, sir.
Great to be here.
You are the man. So let's go back. Yesterday, obviously, we had Mr. Trump here on the floor, the first president since Bush won. And then, obviously, the most notable visit was of Mr. Reagan back in, that was the first day I actually worked on Wall Street. It was March 28th, 1985. And it was wild and crazy here back then. That we had 8,000 people on the floor then working here. So you can imagine when the president come. And then there was as much security because you didn't need that much security back then. Bush won, though. We did do. There was an old prank that used to happen always on the floor of the stock exchange when a celebrity or a dignitary would come down, somebody when they were engaged in a conversation and overwhelmed by the room, someone would come up behind them and douse their shoes with baby powder, right? And everyone on the floor would start banging their feet saying it's snowing in New York. They would suddenly look down and see baby powder all over their shoes. We even did it to the president. Anyway,
really?
Yes, it was extraordinary. That was one of our greatest coups. The only one who actually got upset was, I think he was an Italian, someone in the Foreign Service for Italy. He was wearing purple patent leather velvet shoes, and we doused him with baby powder. He was probably never able to wear those shoes again. Anyway, let's get down to business. Yesterday, Mr. Trump was here. He talked about a couple of things. He talked about setting up, you know that the U.S. has a prudent reserve for petroleum, right, in case of war, in case of any kind of a problem. We've got hundreds of billions of barrels or millions of barrels of oil on reserve in case of a war, in case of a confrontation at some point, because you all know that a majority of the nations that are oil-producing nations are not our friends. Venezuela, Iraq, Iran, and Saudi Arabia, and Russia, of course, the largest producers. So yesterday he did say that he was going to set up a prudent reserve for Bitcoin, right? Which is obviously extraordinary, and I think it's probably given a little bit of the boost to Bitcoin since the election.
On the same day that MicroStrategy added to NASDAQ 100.
Exactly. Isn't that extraordinary? That came this morning.
Yeah.
Right, and then yesterday he announced the prudent reserve of Bitcoin. What does that mean? That means that the U.S. as a nation, there are 25 million Bitcoin, that he is going to start collecting Bitcoin, and we're going to hold it on as a nation, as part of our economy. So that should be a cool thing.
And I think now, this is going to be the big question on next year, do more public companies start to, not as aggressively MicroStrategy, but do they start to put at least a percentage of what they have in treasury from the cash in Bitcoin?
In Bitcoin. So we know, like, Apple's got hundreds of millions of dollars in cash, and a lot of public companies, obviously, how do they end up displaying earnings, or whatever the word is? I can't giving out earnings is by having cash on hand. Some hold cash. That was one of the problems back in the day, that everyone was saying, why is Apple holding so much cash? Right? Why don't they give some back to the shareholders? Anyway, not what we're talking about today. So that's fascinating. So yes, MicroStrategy, Mike Saylor, Mike Saylor's company, obviously is one of the largest holders. I think all their holdings are in Bitcoin.
I mean, and they continue to raise capital, convertible, by Bitcoin. So their view is basically, this is really going to become just a full Bitcoin play. And remember, MicroStrategy is still data analytics, like it's a real company, but the way that this company is now being valued is really as a Bitcoin derivative.
Okay, so if you are looking for exposure to the Bitcoin game and you don't have $100,000 to buy in a coin, there are other ETFs. I believe Bito that trades here on the floor. Obviously, Mara is one, and obviously MicroStrategy. It's expensive. It's trading for hundreds and $400, I think, at your share.
But if you believe Bitcoin, if you believe Bitcoin could be 250, 300, go to $1 million, whatever, then you'll see more and more bet on MicroStrategy as a derivative play. In terms of playing.
So that's exciting. Take heed of that, right? That's coming from the man who knows everything about derivative play. We've heard about that as respect to AI and the derivative plays that are respect
and getting those NASDAQ 20,000 hats, right? I mean, the point is like,
but let's think. When we started having this Einstein and Ives conversation, you said two things to me. Get your 20,000 NASDAQ hats out, and there's going to be a 6 in front of the S&P. by the end of the year, and you have been, boom, shaka-laka, right on that, both of them. Amazing.
Look, and I think
He's not just another pretty face. Forget about it.
no, but I think it also speaks to like the market now just starting to realize that AI, it's just starting in terms of that multiplier. Because we always talk about for every dollar spent on a video chip, $8 to $10 multiplier across the rest of tech.
Right.
Now you're starting to see some of that in terms of software, infrastructure, and build-outs.
And that's going to be in the second, third derivative of like other companies. Give us
Software.
a couple of,
Look, if someone said to you, Avago, if you get Broadcom,
AVGO, right.
okay, look what that stock's done today.
okay.
So it's showing you that, this second, third, fourth derivative, it's not just about Mag 7 infrastructure, about in terms of the chip ecosystem, in terms of software, names like Salesforce,
right.
of course Palantir and others.
Right.
And then the consumer AI revolution that goes to Apple,
Right.
which is why I believe Apple
Right,
would
we're
be the
all
first.
actually right. And didn't they just say they're putting ChatGPT into the iPhone?
Exactly. So that's the first step
That's
to
the first step.
ultimately what's going to be hundreds of apps
Right.
that are built on an Apple device that are
Right.
going to be AI driven.
Extraordinary. So the revolution that Dan has been talking about for months now is actually happening. We are in the midst of it. We started 8 months ago in the second inning of this game. Now we're probably in the third inning.
In terms of the party, it
Right.
started off at 9 p.m. in that party, and now it's 10 p.m.
10
in a
p.m.
party that goes to 4 a.m.
Okay.
And
Who's
as
invited to this party?
now software, Benioff, they were waiting. Their name wasn't on the list.
Right.
2 weeks ago with that earnings. Velvet Ropes, they got in. Now they're on the
let into
dance
the
floor
party.
with Jensen. They're on the,
Right.
with Musk and others.
Right.
Software starting to get invited. So now you're going to see more and more tech players get invited to that party, and that's how this broader rally continues to spread. And again, with Trump in the White House, deregulation, finally early Christmas or Hanukkah present,
Right.
Khan out at the FTC. That
Right.
means more and more deal making is going to happen. That's why it just continues to be what I view it. We're in the second year of what I view as ultimately a 5 to 6 year bull market.
It's so extraordinary. So think about it. When Dan and I were talking a couple of weeks before the election, we were talking about what is the market? How is the look? That was everybody's question. How is the market going to respond to a Kamala presidency or a Trump presidency? And obviously, look, I believe that this administration, whether Kamala had anything to do with it or not, has to take full credit for where the market is today, right? Mr. Trump cannot take any credit for where we are today, trading at record highs across every indice, some of the best 4 years, right? We know it. COVID up 20%. 21 up 28%, 22 down double digits. We know that it was a function of inflation and the interest rate story. 23 and 24 now up 27%. So this administration obviously is responsible for that incredible market across absolutely every indices. But we were talking about what does it look like on either side depending on who wins this election. Your question was that, look, a continuation of the past 4 years, if that goes forward, if Kamala becomes president, then that's not a bad thing. Our fear was with Trump coming in was obviously tariffs in China, right? And you said to me initially, we both agreed that that was the wild card that could cause a problem. Go ahead, but.
And I think to that point, he right away, and again, having Musk at his side is very important too, because some of that rhetoric now has been toned down to where you'll have tariffs.
Right.
But in terms of impacting the chip trade, AI revolution, Apple, Tesla, it's not going to happen.
Right.
And the deregulation
It's a huge problem.
That's because now you look at from FTC to what we're seeing in terms of I think across the beltway.
Right.
That was probably the biggest limiting factor to maybe tech over the coming years.
So just to break that down to somebody who doesn't know really what Dan is talking about, a couple of things. FTC, the people who are the regulators out here, are ousted by Mr. Trump, and you're going to have people more friendly to M&A. So we are going to see a lot more mergers and acquisitions. Number two is by bringing Elon Musk into the inner circle of the Trump family, you are sort of padding. You're carving out any potential disaster. Look, you're not going to have Mr. Musk in the inner circle representing Tesla, and the other Mag 7 are going to now be protected, a carve out around those companies, because you know he's not going to raise himself up in Tesla and let everybody all fall by the wayside. By having him in there in the inner circle, that's going to carve out a protection mode for all the rest of the Mag 7 and tech and AI
and
all
the
those other things.
Autonomous,
right? Which has
key.
not been accepted that well. That's been the wild card.
And today, like I think, like in Switzerland, like they just actually like said like they actually approved autonomous technology. So what we're gonna, and I'll be in Norway and Scandinavia in a few weeks. Like the point is like you're now going to see around the world autonomous. That's something that's, and I could argue that that continues to be probably the best use case of AI for Tesla. I think autonomous is worth $1 trillion alone.
So think about it. What was the one thing that took Tesla down to $350 about 4 weeks ago? Was the meeting they had about the autonomous cars that was not received well. They knocked Tesla down $70 at that point, and it sat there for 3 or 4 weeks. Remember that? We talked about it. And I said to you, what's going on with Tesla? Is it going to come out of this doldrums? And you said, don't worry, earnings are next week. That people are going to get on board with the autonomous vehicle story, and they did. Once again, Dan Ives, number 2, number 3 for Dan Ives, because earnings did come out. The stock went up $13 after hours, $50 the next day, and it's up $100 since then.
But that's also because of the bears. Just because the
Where are
bears.
the bears?
Because no
bears. Are there any bears here?
The problem is because the bears wearing their fleece, no sleeves.
Right.
They can't
full body suits.
They can't find AI in the spreadsheet.
Right.
And I think it just comes down to like what's going to happen more and more in tech. You're going to see across all different subsectors, street still massively underestimating what I believe, AI is going to do to the fundamentals.
Okay, so where does that leave us? That leaves us in the midst of a revolution, the second, third inning of an amazing ball game that's all about tech, AI, Jensen, best of breed. It's also, you're talking about at 4 o'clock in a party that's going till 10 p.m. and a party that's going till 4 a.m. with yet a lot of the derivatives of the AI story, Microsoft, Google, Amazon, have yet to be let in through the red ropes.
And there, I don't expect at 4 a.m. it's a crashing in the party. Because now it's like, the leverage is not in the system. You have $6 trillion of money still in money
on
markets.
the sidelines. Imagine that, still on the sidelines.
That's why I'm not a believer. If you go back to .com bubble, okay, you had the average tech company trading about 30 times revenue.
Okay.
Today, it's 30 times earnings.
Right.
I'm just trying to explain, like, this is what I believe this. I'm not. We're going to definitely have some dips, as we've seen, like Tokyo Black Friday, like Black Monday. Like you have that 5 or 6 times, but the opportunities will be there again. And I think we sit here a year from now being like another market year in terms of tech, because it's a fourth industrial revolution. You just got back from Dubai. You're building Dubai, Vegas, from the ground up, from a technology perspective.
So look, how exciting is this? It's absolutely unbelievable to think about what Dan is talking about, this amazing revolution. And look, at the end of the day, I kind of lost my train of thought. But look, at the end of the day, now, come on, bring it back, Pete. Where are you? You know what? I'll just keep going.
No, but it does speak to, like, as you were saying, like, where we are. Like, when we're talking about things like Dubai or Vegas, ground up, it shows the amount of infrastructure, energy, derivative plays, and now Khan, done at the FTC, deal-making will accelerate.
Okay, so what I wanted to remember, that's a great part of this story, but at the end of the day also, think about it. This market, if you had 7 fingers on your hand, that is the amount of times, I'm a 7-finger hand, like Bruce Almighty. You remember that great scene in that funny movie? At the end of the day, we've had 7 opportunities this year. Look, This market is up 27% for the year. We've had 7 times this year where the mainstream media has called recession, depression, dogs and cats living together, all that craziness, right? We saw it in April, right after the best quarter since 2019. We saw it in July for about a 7% pullback for the first week there. We saw it on August 5th, right, which was that devastating day. We came in on a Monday after Black Monday in Japan with all that story, the carry-on trade. We've talked about it many times. Then September, the first week, the worst week for tech since COVID. The second week, the best week for tech since COVID. October 5th. So that is about 6 or 7 times. And then this week, we had 2 days where the market came off its highs. Last Friday, record highs across all indices. We came in on Monday and Tuesday and we pulled back. Nothing significant, but the mainstream media kept talking about this is it, the story's over, the bubble's here, blah, blah, blah. When these were sell-offs or pullbacks or consolidations, whatever you want to call them, surely not crashes, were nothing more than an opportunity. We always say it. If the story has not fundamentally changed at all, take an opportunity. In April, when we were down 7% in this market, NVIDIA went from 924 down to 700. It happened once again when the earnings came out in March, April, in May and June. We've seen this happen in every pullback. The baby gets thrown out with the bathwater. And if the story hasn't fundamentally changed, take this as an opportunity to buy stocks at a discount.
And you'll see it Fed next week. They'll cut. Then the street will try to parse out in terms of Powell's words.
Right.
Are they going to continue to cut into next year? Look, the reality is Fed's going to cut 100 bips the next 12 to 18 months,
right,
regardless of when that happens.
Right.
That is a soft landing engineered, but in those periods, you get opportunity.
And you get opportunities. I love that. Do you think Santa Claus is coming to town?
I think Santa Claus is coming down, and ultimately, look, there's a rally into the next 2 weeks.
Right.
Then you probably go into early next year, a little bit of a pullback.
Right.
You have all
January profit taking. What do you think about this tax credit thing? Like, if people are not going to be selling, right? They've got profits in their investments this year. Most people, unless you've been trading blind and you're not making it. Even our man Niall here, right? Our filmer here has made a lot of good money this year. Don't tell the IRS anyway. Yeah, go ahead.
No, but to that point, I don't think you have massive tax up, because also you have one where tax cuts are coming.
Right.
Salt's going to come back.
Right.
And the fundamentals of this market are accelerating, not deep. So the point is, this is going to be one of those periods where I think is actually going to be a very strong first half of the year.
2025.
And then maybe you have some sort of sell-offs in the summer, but I think overall you're looking at an S&P 7,500.
You heard it here first.
And then NASDAQ, we believe sort of 23,500, 24,000.
Really? That's extraordinary. Look, those are amazing numbers. And look, if historic data tells us anything, Dan called these numbers in February 2024, and he's calling them here now. That's what 2025 looks like. Any fears of what could happen within the new administration coming into next year?
I think you'll have fears around China tariffs,
right,
Hawks, Rubio, some others,
right,
Navarro. But I think the reality is that they're going to get to a better spot.
Right.
In other words,
you're going to tamp down that aggressive narrative.
Now, as you go through it, you'll have some game of high stakes poker.
Right.
That's what happens in negotiation.
Right.
I believe Bark will be worse than Biden. I don't think that most importantly, that doesn't negatively impact AI trading.
Right. Okay, so think about it. Even though the bears do come out every once in a while, they're sitting in the cave with their Pepsi slushies and a bag of Doritos. Now there's new organic Doritos. I just found out about that the other day. Go check them out at Christmas. Organic Doritos. Can you imagine? You think the bears are eating the organic Doritos?
I'm not.
Or they're straight out old school Doritos?
But the thing is, look, I'm more old school. I'm not sure I'm sold on an organic Doritos.
No, it's counterintuitive.
It is.
Doritos are Doritos.
It is.
Right. You just want to eat them and get nauseous. It's all
exactly.
Yeah, exactly. Okay, so we're going to wrap this up. It's really a pleasure. We are going to have one more, I hope, before the end of the year. Yep. Dan Ives, Einstein and Ives, trade like Einstein Money News Network. We are covering in for our friend Nicole Lappin, who's on maternity leave. Ladies and gentlemen, we are in the midst of a revolution. Put your money to work. We have explained this to you on any level. Get your feet in the water and get busy making money, not losing money. Invest in stocks, not stop. Have a great holiday. That's it, my man.
Awesome.
Dan Ives, giddy up. Boom. That's all I got to say about that.